Hey there, it's Trisha with Easy E-mini Trade, and I just want to do a follow-up for a setup that I had been working on prior to doing the Ichimoku webinar, and it's using just the Kijun line. And if you want more information on the webinar, you can go to easyeeminitrade.com and just click on the Ichimoku webinar recording tab, and all the information is there. I'm going to show you the setup using the two stochastics with the same settings that we use for our range chart setup and the 1 minute setup, but the difference is we've got this on a chart with the Ichimoku components. So hope you enjoy it, and let me explain it pretty quickly. So what you're looking at here is NQ on a 1 minute chart. You can test this out on a range chart or a tick chart, whatever type of chart that you like to use, or a larger time-based chart. It's totally up to you. First off, I do want to say that if you're using the Ichimoku for Ninja 8 that you got from the forum in Ninja or off the webinar download page from the webinar that I did, you have a couple options there. Display cloud only, which I'm not. I'm using the components, and then you can click here to adjust chart margin, so you'll see the future cloud. I'm not using the Tekin line, so I've got that colored as transparent, and then you'll also notice that you have a Senecal span A and B on here as well. I changed those to transparent because I'm not sure why we have that option, since the cloud technically is Senecal span A and B, so I'm not sure why those are there. So those are the settings that you can use for the Ichimoku. And if you are still having trouble plotting your cloud, you can right arrow to see it if you don't want to change your margins. But if you do want to see the future cloud, just right click on your chart, go to properties, and then increase your right side margin to however large you want it to be, however much of that you want to show. So it's totally up to you, how much of that right side you want to see. All right, so the setup is pretty easy. These are the two stochastics, like I said, that we use for majority of the setups that I trade on charts that I don't have the Ichimoku components. And a couple great things about the settings that we're using, and Gordon turned us on to this 40-point gapper many years ago, but whenever you get 40-point gap between these two stochastics, and these are two stochastics overlaid on the same panel. I'm not going to go into the setting or how you overlay it. If you want more info, just go to the webinar recording for the Ichimoku, because everything's explained there for those stochastics if you wanted to use them. So anytime you get that 40-point gap, it's usually a good heads up that price is either going to go sideways or move in the direction that the green line would have to find its way toward the red. The exception to that is if we have a very volatile market and the market is moving quickly, the red line can work its way toward the green, but typically that's not the case. Typically, like I said, the green line will find its way toward the red. So in this instance here, you could see as this bar is coming down to the cloud, we have that 40-point gapper. And so we anticipate it's either going to go sideways there or bounce. I'm not saying we take an entry, but if we're in a sideways market and you're at support and you saw that, that would be ideal for looking for a buy, but I'll save that for another day to explain. And I'm using Gordon's indicators that he did for the stochastic. It'll tell me what direction I'm looking for the trade. You can see it down here in the right-hand corner. But it's not necessary. It's just a nice, easy visual. And like I said, it will mark those 40-point gappers like that, or with a blue or gray arrow as well. Let me see if I can find one of those right there. So the triangles are like a heads up for getting very close to 40 points. All right, so here's the Kijun line. It's the fat purple one. Here's our cloud, and then this is the Chico line. As mentioned, I'm not using the Tekin line, and so all we're looking for is a close above the Kijun line or below the Kijun line with our double stochastic to agree. So what does agree mean? I want my green line above my red for a buy, or I want my green line below the red for a short, and the exception to that is if the red line is above 80 in overbought, I'm still looking for a long. If the red line is under 20 in oversold, then I'm looking for a short regardless of what the green line is doing. So we're not throwing all of our info that we know out the window about the Ichimoku. It's a way to capitalize on the close above or below that Kijun line. So as always, the most powerful entries using the Ichimoku is going to be when price is above all the components for the long and when price is below all the components for the short. So anytime you're going to go against the cloud is going to be, let's say you're looking for a short, the cloud's going to be support. If you're looking for a long and the cloud's above you, that's going to be resistance. And as always with the Chico line, if the Chico line is under price, you have to be a little cautious as you see it coming up into price to hit it, or if it's above price and it's coming down into price to hit it. So ideally, Chico line below price is best for shorts. Chico line above price is best for longs. All right, so with that said, the setup is very easy. So I'll start back here. You're looking for a close below, and this is right off the open at 9:30, so I'm not suggesting that somebody's going to take an entry right at 9:30, but right here we get a close below that Kijun line. My green line is below the red, so realistically I could take a short there. Now anytime you have a skinny cloud, less reliable as an area of support or resistance, but right here you can see we're getting closed below the Chico line, my green line under the red, so I can enter in after this bar closes. I can enter in under the low of that bar or anywhere on the next bar price as long as it traded through the low of this bar. So this would be the setup bar, this would be the entry bar, and the low of this bar here is 31.75, so a tick below that would be 31.50. So as long as this next bar traded to 31.50, so 31.50 or better on the next bar is where I want to be filled. And what's nice about this one is that we've got the Chico line back here at that time, because remember this plot's 26 periods behind. So this is under price and under all the components, so that's ideal for looking to take a short. So you take the short, and then this is the previous days, this is yesterday's high, so that could be your target area. Or if you're looking back a little bit, I don't know where support and resistance areas are back here, so let's see, I probably would look here as possible support, and then over here as possible support, and then I would look at yesterday's high as support. So just in an area where possibly price might struggle. All right, so that would be an entry. Then we're looking for a close above with our stochastic to agree. So if I draw a line here, you can see we're closing above that Kijun line. This is where the Chico line was at the time. So we know if we take this buy right here, closing above the Kijun line, that with this Chico line being below price, that we might wind up with a stall or a pullback when that Chico line hits these price bars. So that's what would go through my head there. So you could take this as a buy and then just kind of pay attention to what's going on once that Chico line trades back to price. So if it gets back above price here, then realistically, price is going to be able to bounce up to the cloud. So the entry on this one would be a tick above the high, which would be 25.25. So you can get filled anywhere on the next bar at 25.25 or better. And notice when we take this, if we take this, we don't have our 40-point gap yet, but on the very next bar, we wind up with our 40-point gapper. And price stalls a little bit in this area until we kind of fill up this space, and also the Chico line gets through price over here. So it works out fine. Like I said, if your entry was 25 and change or better, trades up to 29.75 on this bar. I'm not sure that you would have held for the next 5 or 6 minutes waiting for it to run into the cloud there. If you did, then great. But again, just always looking ahead at support or resistance as your possible target areas can save you a lot of grief. Next one here, let's see, close below right here, still in overbought with our red line, so that's a pass. Even if it wasn't in overbought, we would be likely leery on taking that one short right into that cloud. So as always, anything into the cloud is going to be likely a spot that you want to avoid. Or you can always take it if you have a really fat cloud and you think you've got room down to the lower end. But as always with the Ichimoku components, inside the cloud is pretty much neutral. Okay, so that one's a pass. We get closed above, looks like, well, closed below here, right here. And it looks like we're out of, let me just draw a line here. Looks like we're out of overbought, but notice here on the very next candle, so this one closes below price, right here, I mean below the Kijun line, and the low of that bar is 28.75. Notice the next bar never traded to 28.75. So this would be the setup bar. This would be the bar that you want it to at least trade to the low of this candle before looking to place your order, and it never does. So I'm not saying that you have to wait for it to close before you place your order. You can use a sell stop and put your order in a tick below the low here, which would be 28.50. Never trades to that on the next bar, so that would be a cancel. If it doesn't fill you on the very next bar after the setup bar, cancel the order. This one here, you can see closes above the Kijun line. Stochastic not in line for the buy right here, right? Because our green line's under the red, so that's a pass. This one closes right on the Kijun line, not below. This one above, not valid here. And then this one closes below, and it is valid, right? It's valid because our green line under the red. So we can look to take that as a short, and as always, we're going to want to know approximately where is the cloud below us, because we're going against the cloud, right? And where is our Chico line? So at the time, let me just erase this so we don't have too many lines here. So at the time this bar was forming, I'm just going to use this little ruler here. I'm going to go back 26 bars. I'm just going to guess. That's 21. Let's see. All right, so it looks like right here would be 26, right there. So you can see on that one, we would be looking to take this short, but our Chico line is above price. So this is going to tell us that if we take this short over here, when it closes under that Kijun line, that when this Chico line gets down close to price, that we could be in for a bounce before that Chico line can get through price. So if it gets through price and it's under you, that would be better, but we can still take this and anticipate support. So we drew this line here at 26 and change from earlier this morning, and then you can see it's still reacting here. So we can use that as a target area if we choose to take this, and then ideally our next target area would be the cloud here. So that would obviously work out. It would be good for a few points, I think. Let's see the low of this bar, 30.50. So you'd look to get in at 30.25 or better on the next bar. With this area, let's just round up to 27. So, probably good for 3 points or so. It actually got to 26.75. If you held on for it to hit the cloud, it does eventually hit there. Right here, this buy is technically valid right here. And we already know that we've got this little area of resistance because we marked it. So if I were looking at this as a buy, I would actually move my resistance line up to the last little area where it was reacting. And so I'm always looking for common areas. So this would be a common area. So what would go through my head if I took this as a buy, because the green line is above the red, closing above that Kijun line, I would look for this as a possible reaction area at 34.50. So I'd have to decide if I get in this at let's say it's 32.50 is the high, so 32.75 or better on the next bar. Is it worth the risk to take that into a resistance area? Now, also, one thing I do want to point out is if your Kijun line is very flat or there's no real strong direction to your cloud, then those types of areas are going to be more in line with being more aware of support and resistance areas, right? Because that's generally telling us that we have a sideways market. So down here we get closed below, not valid because of our green line here. Here we get closed above, right on this bar here. And also on this one here, our Chico line is actually on top of price back here, like it's literally in the mix here. So anytime that Chico line is in the middle of the price areas, then that's usually a heads up for, again, being aware of where support is below you if you're taking a short, or where resistance is above you if you're taking a long. Okay? All right, so this buy here, it's valid here, green line above the red. We're still sideways, we know that, we can see, just look to the left. So if we take this, we're still gonna have to be aware of this area that's been holding above us at 34.50, right? So you take the buy, the high is 32.25, so you're looking at 32.50 with 34.50 above your head in the event that price can't get through. You have to decide if that's worth the risk. And then let's say price can get through it, then I would be looking at the last area where it reacted. So I'd probably look in this little area here as my next possible resistance, as my target. And then you look to the left a little bit further, where's resistance? And if you have trouble with that, just look at the old cloud. Where was the cloud at the time, right? Because the cloud in the past also is going to be representing areas of support and resistance, right? So not just the cloud in the future, we can look at the cloud from the past as well. And so this is obviously sideways where we're talking about this. So in sideways does require more effort to be aware of the trouble spots. And then again, taking it, where's the Chico line? If it's underpriced and you're taking a long, then once that Chico line comes up and hits the price bars, that you're possibly going to get a stall or a pullback. All right, you guys, so practice with that. Let me know what you think, and definitely go back and check them out. And as always, don't take my word for it. Do some work and see what you think. And I'll try to follow up on it a little bit more here in the next few days. I actually took a short on ES earlier with this setup. And this was the short that I took on ES on this right here. So I was willing to give it a shot using the approximate area of the cloud as my target area. So as always, if price is hanging around the cloud, caution. Here's a buy here on ES into 10 o'clock. I think there's probably news at 10, I don't know. But if you take the buy, it's really close to the cloud up there. And then also you've got your 40-point gapper here. So that's a heads up for possible sideways or a pullback while we fill up this space here. All right, so like I said, mess around with it. It looks really good, you guys. I'm using that stochastic for our filter. If you prefer not to use a filter, that's okay as well. All right, you guys, have a great day.